firstly I would say that the industry here in Malaysia is pretty much similar to the rest of the region. In terms of front-end load, there have been attempts to offer no-load funds in Singapore, as we know, under the CBF system, in Hong Kong, under the retail environment, and elsewhere in the region. And what have we learned through those initiatives? We've learned that unit trusts are sold and not bought. We know that. You have to carry the funds to the market. The market doesn't come to you. It would be very nice if everybody got up every morning and before they had their breakfast thought about their long-term savings requirements and called up their IFA or their advisor and talked about their portfolio. But that doesn't happen. There is no question that distribution costs are high in our industry. They are in all financial services industries and all branches of it. And I think what we have to do is a couple of things. On the expense ratio side on the funds, it comes back to my last point. We have to operate more efficiently. We have to get our operating expenses down. That's through investment in technology, partly through economies of scale, but I think basically giving a better deal to the investor. On the front-end load, I don't think there's any answer that will solve the issue of distribution. We're not the United States, where the level of financial literacy is at a level where people feel comfortable. Half the market feels comfortable buying funds without advice. That's not the case in this region, and it won't be for some time. So I think what we're going to see over a number of years is if we do a good job building up the knowledge and the understanding of the need to save more longer term. I think once we have a bedrock of long-term assets invested in funds, we'll then start to see some services develop which have lower front-end fees around them because individuals already have a significant amount of money invested in funds and they're then looking for substitutes in terms of adjusting their investment profile as they get older. I think then you're likely to see the front-end load come down. So, we're always defensive when we talk about front-end load. However you talk about it, it looks like you're trying to defend your case, which is not a good position to be in. We can say that, an insurance policy typically charges its front-end load over 7 years, so you don't see it the same way. The company backs that. Or you could say when you buy something on the market, an ETF even or a stock, there's a spread which you don't see, and that effectively is a front-end load. But it's all defensive. I think what we have to do really is promote the attributes of what we've got. It's transparent, all the fees are known up front, you pay the front-end load, you then invest for the next 20 years, that's key. It should discourage short-term trading. Some companies have tried exit fees. It's big in China, but I can tell you that creates a misalignment between the client and the company because the company earns more money while people are redeeming. So you get situations when the market is in recession, i.e. the stock market's coming down, people are taking their money out of the funds and companies are making more money than they did when the market was going up and the clients were doing well. To me that sounds like a misalignment. So I think it's something we have to live with. It's a question of deepening the market and it's something we should not be defensive about.
Thank you, Mark, for the very